You know what's funny too, as I was looking at this, I saw this commentary. Well, expect APRs to go up, on your credit card debt, and it's like, well, have they been going down this entire time as interest rates have been on a one-way track to basically zero? Like, where has that adjustment been? But now that it's going back up, to still historically low levels, we should expect higher credit card interest. Okay,
Yep.
that seems fair.
Crazy.
You know what? That's a really interesting point that you bring. Kind of like the death of the small to mid-sized regional bank.
Oh my gosh.
I've
It's
been
crazy.
actually trying to put together an episode on this for a while, and I haven't found the right person to talk about it with. Because if you look at the layout of banking in the United States over the course of the last like 50 to 60 years, the story has been consolidation. As like there have been basically little bubbles of risk that have popped up in different usually like credit-based sectors. Like there used to be savings and loans companies, right? And then there was the savings and loan crisis in like the 90s, right? And basically the government's solution there was to have banks absorb, the credit and loans. And then eventually, like as there were smaller pockets of disturbance in like regional banks, like bigger banks just consume them. And actually in 2008, that was like the ultimate thing, right? Where there was an enormous amount of consolidation in the banking sector.
Yep.
Because the whole solution, right, to when bad loans are made and you need to absorb those assets just to move on to a bigger balance sheet. And what that's meant is that the ultimate customer for those larger and larger banks have to be bigger and bigger. So as a small to mid-sized company, suddenly you don't have any banks really that think of you as their customer.
Again, someone who might be prone to conspiracy theory might say that's the plan, right? That you choke off credit to the small and mid-sized enterprise. You create this massive set of oligopolies and monopolies. You give those large companies tax breaks in exchange for them buying back their stock, which is owned not by the average person, but by the rich people. Right? When did Warren Buffett buy Apple? Right before they announced this massive stock buyback program. Oh, and how did they finance that? Oh, well, they were given a cut in their corporate tax rate by the administration after they lobbied. So, again, it is, I think, part of a very large plan, and it's just not pretty for growth. Like, I went on Mornings with Maria this morning at dark 30. I hate the 5 o'clock wake up call. I mean, I hate it.
That's early.
And 6 o'clock, bright eyed and bushy tailed on television, and they were showing the clip of Biden last night on Jimmy Kimmel, saying that we have the fastest growth in the world, and I guess he did something like in the world, like almost like a Wayne's World kind of reverb, and it's like lying with incredulity is supposed to be a good feature of a leader. I mean, on no planet are we the fastest growing country in the world, and nor should we expect to be the fastest growing country. It's just math. I mean, we are the largest economy. The largest economy will not grow the fastest. Now, you could say that our economic growth, right, may be the incremental growth might be the largest. That's just the law of large numbers. You might be able to say that, although I'm not even sure that's true because China's is probably bigger than ours. But this nonsense of rah us and China's evil and I don't know, just the whole thing smacks of, I say, desperation. And this whole idea, I tweet about this too, is repeating a lie over and over as if it is the truth does not make it the truth. It is still a lie. And even if people believe it, it's still a lie. Like if I just told you over and over again that I was 6'4" and I sort of sat up straight and I look tall sitting down, and everybody, it's so funny. Zoom has made me just a total. I can't judge anybody's height anymore. And I meet people in real life, and they're either super tall or short. And I thought you were all the same height because we all look the same on Zoom.
Yeah, that's a recurring theme in Blockworks. We keep hiring tall people, and we don't know it until we actually see them in person. So it's like, a huge amount of the company is over 6 feet. I'm with you there. But I mean, walk me through, because I think the reason why we're zoning in on this particular issue, right? And I think there are two ways to interpret this kind of gorging that U.S. consumers are spending on credit cards. One, you could look at it as a very unhealthy sign, right, of just the consumer balance sheet, so to speak. And we've got some contrary data that I'm going to get to in a second that show why these numbers might not be so bad. But basically, one way you could look at these numbers and say, wow, this is really bad. We're approaching a recession, and consumers have basically tapped out their personal savings and they're starting to live off their credit card, which is obviously very bad. Another way that you could look at these numbers, though, and this may be the bearish case, is that the Fed overall, they're trying to take liquidity out of the market, right? And what they want to see is actually contracting credit, because they know that they need to cause a recession to kill this inflation so they don't get that death wage price spiral that everyone's so afraid of.
Well, let me correct. They think that will work.
They think it'll work.
It isn't going to work, but they actually believe. This believe. Is the crazy thing, as you described perfectly, their thought process. They actually believe that by raising interest rates and choking off credit and I said killing off a whole bunch of businesses that are over-levered and a whole bunch of consumers that are over-levered, they actually believe that somehow that's going to solve the low production of wheat globally this year and the inability of ships to get in and out of China ports to fill up with goods to bring back. Nothing that they do will impact those things in any way. It will not change the price of natural gas from $9.50. It won't. You can raise rates to 20%. That will not change the fact that we have underspent on infrastructure in oil and gas, particularly in pipelines. It just won't fix that.